Welcome to Profit First Nation, the official podcast for entrepreneurs who are operating their businesses in the zone of permanent profitability. I'm Mike Michalowicz, the author of Profit First, and now here's your Profit First Nation guide, Daniel Mulvey.
Welcome back to another episode of Profit First Nation. Today we are going to walk through the 8 most common mistakes when implementing and working Profit First in your business. So mistake number 1 is forgoing opening your bank accounts at your primary bank and your inconvenient bank. So really remember, step number 1 is getting your butt to the bank when implementing Profit First. And when you implement Profit First, you open up those bank accounts at your primary bank. And those are 5 checking accounts at your primary bank. You have number 1, your income account. Number 2, your profit account. Number 3, owner's pay. Number 4, your tax account. And number 5, your operating expense account. And then don't forget that you got to get to step number 3 when you implement Profit First. And that is getting your butt to the inconvenient bank to open up your savings accounts that are your profit hold and your tax hold account. So primary bank, opening up those 5 accounts, those are checking accounts, and then getting to your inconvenient bank and opening up that profit hold and tax hold account. Now, this is not meant to be done on a spreadsheet. This is meant to be done with physical bank accounts. You need that sort of structure. You need that discipline. You need that accountability. Okay. You need to be having that reconciliation that happens at the end of every month with each of those bank accounts. And that is so important. And then the inconvenient bank accounts, the profit hold and the tax hold accounts, we want to get it out of sight, out of mind. We don't want to be tempted by it because there will be weak moments in everyone's business. And you don't want to have that weakness and that availability of cash at your primary bank to maybe borrow from yourself and such. So that is number 1 mistake, is not opening up your bank accounts at your primary bank and at your inconvenient bank. So get your butt to the bank and open up those accounts, and it will make your life so much easier and your business more profitable. Mistake number 2 is waiting until you're profitable to implement Profit First. If you don't implement Profit First now, you are waiting to become profitable if you're not already profitable. Profit First will start making your business profitable from day 1, because as soon as you open up those bank accounts in step number 1, step number 2 is to start allocating 1% of every deposit to your profit account. And that will put you on the path to permanent profitability and start to build that profit muscle. Because if you start allocating right out of the gate 1% to profit, that means that you're running your business on the 99% of what you've already been running it off of. So you're immediately becoming profitable by allocating 1% and then working through the other steps, because you can, without a doubt, operate your business on the 99% that you've already been operating it on. And you've turned your business into a profitable business overnight, because that allocation of at least 1% to profit gets you into that category of profitability. So that is so important, is just now is the time. If you're not profitable, if you have business debt, this is the best way to pay off your business debt. Because remember, when you implement Profit First and you start allocating to profit at the end of each quarter, if you have business debt, you're going to take 98%, 99% of what's in that profit hold account and pay down the principal of your business debt. And that is how you're going to get rid of that business debt. And then once that business debt is gone, at the end of each quarter, when you go to your inconvenient bank, you're going to take 50% of what is in your profit hold account as your profit distribution as the owner of the business. And that is the Profit First way to profitability. Mistake number 3 is hitting your target allocation percentages out of the gate too much too soon. All right. So you really need to go through the steps of properly implementing Profit First, and don't do a Danielle Mulvey. When I read Profit First, I said, oh, Mike Michalowicz doesn't know Danielle Mulvey. She's a type A person. She can do this. I don't need to bother working through these allocation rollouts and such. I'm just going to hit the target allocations out of the gate. And guess what? That's what I did when I first implemented Profit First. And it worked amazing. It was great. But then when it came to our second allocation day, it was a huge, ginormous, epic failure beyond belief. And that's when I was like, all right, I was wrong. Mike Michalowicz was right. I have enough margin in my business and in my life and in my time that I decided I really wanted to do this right for my husband and I and our businesses. So I actually, super nerd me, became certified as a Profit First professional and just really wanted to perfect this, and now have a podcast to help you don't do what I did. So you want to hit those allocation percentages slowly. That's why you build out the rollout plan. When you implement Profit First, the first thing you're going to do is just start allocating 1% to profit. And then when you build out your rollout plan, remember it takes 6 to 8 quarters for most businesses to move from their current allocation percentages to their target allocation percentages. So each quarter over quarter, for the 6 to 8 quarters to get from your current allocation percentages to your target allocation percentages, you're just making small adjustments to each of those allocation percentages. I've seen some businesses that, have been allocating nothing to profit and nothing to tax. And when they implement Profit First and start that first rollout quarter, they're starting to implement by doing 1% to profit, 1% to tax. And then over time, they'll eventually get to the target allocation percentage, 15% to tax, but they're going to get there by going 1% in the first quarter, maybe increasing it to 3% in the next quarter, 4 or 5%. You're just moving those allocation percentages up or down 1, 2, 3, maybe 4 percentage points. Okay. So that gets us to mistake number 4. We don't want to make this mistake. And that is making your instant assessment too complicated. All right. The first thing that you want to do is you just want to stick to figuring out, what am I allocating right now? What percentage is owners pay? What percentage is profit? What percentage is operating expenses? And, what percent have I been allocating to tax? And that is the simple way to do it. And that will enable you to hit the ground running and to start the implementation of Profit First. You can get into more advanced topics down the road and add additional sub-accounts and really figure out, okay, payroll is a sub-account of operating expenses. What is my payroll percentage? Or marketing is a big expense for us. What is our marketing percentage? Really just start by, it literally should take you no more than 5 minutes to get your instant assessment done. You are going to pull your income statement or your profit and loss statement on a cash basis. Remember, Profit First is a cash management system. So you are going to look at your financials when you're looking at it from a Profit First perspective by a cash basis, not accrual basis. So pull those financials on a cash basis. You're going to want to pull it for the year prior. So we're in December 2023. Let's look at January through December 2022. Or when you get to the end of December and reconcile your accounts, you can look at this year. Well, actually, this is airing, January 2nd. So you can look at January to December 2023 once you've reconciled December. And then it literally 5 minutes or less to figure out what your income's been, owner's pay, what your profit has been, what your tax allocations have been, and then operating expenses. And then that moves you on to mistake number 5, avoiding mistake number 5 at least, and that's skipping building your rollout plan. So we talked about this in mistake number 3. You don't want to hit your target allocation percentages out of the gate, which is why you need to build a rollout plan after you do your instant assessment, okay? And the rollout plan is going to help you map out over 6 to 8 quarters on average where you are in your instant assessment. And then what's your first quarter of Profit First implementation going to be? If you've been at 0% profit, then do 1% to profit, do 1% to tax, and let's look at what you've been paying yourself. Now, if you have been taking some compensation and using your business as a personal piggy bank, let's say, then make sure that you understand, is that really an expense that should be counted towards income? Or is that an expense that is a true business expense and not just a business operating expense for a write-off in your business and such? This is really important for you to get honest with your financials. And when you get honest with your financials and really understand the numbers of your business, that's when you can make that wealth building and increasing your profitability as measurable by cold hard cash in the bank. So make sure that you don't skip out building out your rollout plan. And then it makes it real simple. Again, building your rollout plan is going to take another 5-7 minutes to just move those percentages and put it into the spreadsheet quarter over quarter. And then now you've got your blueprint. Now you've got your plan. And at the beginning of each quarter, you look at that and then you adjust your allocation percentages in your allocation day calculator and you are good to go. So I know we're talking a lot here, and your kit for how to avoid these mistakes and walking you through this will be available at profitfirstnation.com/153. So you can get the resource for this episode at profitfirstnation.com/153.
Struggling to turn a profit in your business? Profit First Nation shares the proven systems used by thousands of entrepreneurs to transform from barely surviving to permanently profitable. Mike Michalowicz and Danielle Mulvey have been in your shoes. Now they pass on what they've learned, the exact financial hacks and mindset shifts to drive profitability through the roof. Real stories from the entrepreneurial trenches. A clear path to earn great money doing work you love. Join the Profit First community. Transform your business from a cash-eating monster to a profitable money-making machine. Subscribe now on Apple Podcasts, Spotify, and more. Passion, profit, and play a weight in the Profit First Nation.
All right, and we're just sailing along to mistake number 6, and that is not having a sales plan and failing to reverse engineer your business. Okay, just because you open the doors and roll out the welcome mat, do some marketing, etc., if you don't know what your business needs to do in terms of the sales it needs to make and what that margin is that you're actually making, because the margin is what you're really running your business off of, that margin is what is, in Profit First speak, your profit, your owner's pay, your tax allocation, and your operating expenses. So you've got to have a sales plan. You've got to know, what do we need to be selling? How much do we need to be selling of it? And when do we need to be selling it by? And how many sales do we need to be making per day, per week, per month? By each of your major SKUs or your major offerings. So important to really get this dialed in. And again, in that resource at profitfirstnation.com/153, we've got in one of the tabs of that spreadsheet, the reverse engineer calculator that will really help you get this dialed in and understand what it takes. You're plugging in a few numbers based off of your target owner's pay, and then it will really break down for you what you need to be selling and the number of sales that you need to make. And what's cool about it is you can adjust what you're selling it at and the margin that you're making it at to see what an impact does a 10% increase do in the sales of it. Or if you're moving the price from $159 to $189, what does that look like? So you can look at it from a couple perspectives. And that is really so important for your business, is to have a plan. Otherwise, you're just wandering around and aimlessly going about and hoping things happen to you. But I'm challenging you to make things happen for yourself by making that plan and sticking to that plan. Okay, mistake number 7 is cutting too many costs to spite yourself. So I know that you hear it all the time on this podcast. There's only 2 ways to increase profitability. Number 1, increase margin. Number 2, decrease expenses. And so a lot of eager beavers, when they come to implement Profit First, just start cut costs until they're just like no costs almost in the business. And so that can really be in spite of yourself. You want to be very careful about the costs that you cut and really scrutinize, do I get a benefit from this? Is the benefit worth the expense? So the benefit should produce a return on that expense. For marketing, for example, our metric is it should return at least a 6x to 10x return for every marketing dollar that you spend. But, think about your time too. Let's just say that you have an expense and that expense is, let's just use cleaning services and cleaning services for your home, for example. So for me, I pay $200 to have our house cleaned once a week. And when I pay $200 to have our house cleaned, I'm getting 4 people showing up to my house and they're getting it done in about an hour, 15, 20 minutes. Okay. So that's $200. If I were to clean my house, obviously, if it's 4 people taking about an hour and 15 minutes, that's really the equivalent of 5 hours, man hours of cleaning that house. And that is translated down to about $40 per hour. If I were to do that, I'm just going to be honest, I'm worth more than $40 an hour. So for me to cut that expense of cleaning my own house for $200, that's cutting an expense to spite myself, because now I'm going to have to spend at least 5 hours myself cleaning the house, not to mention going out and buying cleaning supplies and keeping up to stock on that, where my time could be better served making way more than $40 an hour in that 5 hours of time versus cleaning the house. Does that make sense? All right. And then number 8 is not addressing margin. That is another mistake. It goes hand in hand with cutting too many expenses. If you don't address your margin, again, that's a big mistake. You've got to constantly be increasing your prices, increasing your margin, and you can't just be arbitrary about it. I had an appointment the other day and that person said, oh, by the way, it's December now. I just want to give you a heads up. We increase our prices by $10 every other year. And so that $10 increase is going to go into effect in January. And I'm like, okay, no problem. But the interesting thing about that is it's pretty arbitrary. And actually, by just having a fixed dollar amount of $10 every 2 years that they're increasing their price, they're actually not increasing it at the same rate. So they're kind of like actually decreasing their margin to a certain degree, because expenses definitely go up year over year. But if you're only increasing your price by $10, a fixed amount, and the expenses are increasing, you're actually probably should be at maybe this year increasing your price by $15 or $20 to maintain that same margin, to keep that difference between what you're charging and your expenses, because the expenses go up and sometimes those expenses go up and obviously you have no control over those necessarily as well. So you really have to address margin, because it's not increasing profitability is increasing margin or decreasing expenses. It's typically a combination of both, and you've got to be on top of that. And so margin is so important. Use the resource at profitfirstnation.com/153, the resource for this episode, so that you can really get all of this dialed in and not make any mistakes, and also figure out what is that ideal margin and what is the price that you should be selling at. Okay. One last bonus for you that will be the game changer for you in terms of making the implementation of Profit First wildly successful and making your business wildly profitable is you can't fail to account for accountability. All right. And what I mean by that is you've got to build in some accountability in implementing Profit First. And what do I mean by accountability? By getting a partner, getting a coach, working with a certified Profit First professional accountant, bookkeeper, or coach that really knows exactly what needs to be done. And when you're struggling and when you're having a hard time and when cash seems it's not there and you are tempted to maybe move something from one account to another account to cover that account, your Profit First professional, your accountability partner can help you work through it. All of us are smarter than one of us. And so it's much better to work together instead of alone. Make sure that implementing Profit First, that you make yourself accountable by getting an accountability partner, either in a mastermind group, but highly recommend working with one of my fellow certified Profit First professional peeps, those Profit First professional accountants, bookkeepers, and or coaches. And you can connect with a certified Profit First professional by, again, going to profitfirstnation.com and clicking on contact. So thank you so much for tuning in to this episode, and cheers to another profitable day, my entrepreneurial friend.
Thanks for tuning in to the Profit First Nation podcast. We hope you found today's episode valuable and that it's inspired you to take action towards achieving permanent profitability in your business. If you want to learn more about how to implement Profit First in your business and connect with a community of like-minded entrepreneurs, be sure to visit us at profitfirstnation.com to download our how-to guides and resources. Remember, permanent profitability is within your reach, and we're here to support you every step of the way. So let's do Profit First right together.
Profit First Nation website, related podcasts, and videos are provided for general information purposes only and do not constitute accounting, legal, tax, or other professional advice. Visitors should not act upon the content or information found here without first seeking appropriate advice from an accountant, financial planner, lawyer, or other professional.